cattle? Oil, uranium, and more, but this is where most of you will end up. The S&P 500, or ES, is the most traded futures contract and is perfect for trades targeting medium to large moves. The Nasdaq, or NQ, is a scalper's paradise, where during the market open, 20-second candles currently have an average range of around 9 points, meaning $180 on just one contract. Do the flippy. Flipping between these two pictures of the same time span between ES and NQ shows you how similarly they often move, but there will occasionally be minor to major deviations. Look at this big move up at 1040. It's about 110 points on NQ, and it's about 30 points on ES. So essentially the same move, but that's $1,500 on ES and $2,200 on NQ. This is why there are more short-term opportunities on NQ, since so many more points of movement are happening within similar structural changes. Here you can see an example of how they can deviate from each other, with ES bouncing off the previous low, yet NQ going right through it. When you start looking closely, you'll notice more little differences like this. I'm only comparing these two for simplicity, but there are lots of different markets to choose from, so explore until you find something you like, as they all move a little differently. The intraday margin column shows you the minimum account balance for you to take a trade on the following contracts. In this column, you'll see that right now you need $500 in your account to trade one ES contract, but this is the minimum. Let's say your account was $550, you buy one contract, and at $50 a point, if it goes 1 point against you, your unrealized account balance will be $500, aka the minimum margin requirement. If the position then goes against you even by just 1 tick, your account will no longer meet the margin requirement, the position will be closed, and you will typically have to pay a fee to your broker for doing this. So, your account needs to have some wiggle room beyond the margin requirement to let the position move. Day traders pay attention to intraday margin, swing traders pay attention to initial margin, and brokers will differ in their margin requirements. If you're wondering why futures are set up this way, it's because you aren't actually acquiring the whole contract. The actual value of the contract could be for a couple $100,000, but most people can't do that, so margin is just the amount your broker wants in your account to control the contract. Some futures contracts have smaller versions called micros, and these move the same, but the contracts are 1/10 the size. So, a $500 move on ES is a $50 move on MES, and a $20 move on NQ is a $2 move on MNQ. Micros are obviously great for learning after you've figured out your actual strategy through a sim account, and click the video in the top right to make sure you don't waste your time following systems that have the same predictive power as my cat. Futures are by far the simplest and easiest to understand thing to trade. There are no Greeks like options. What you see is what you get. It's just an agreement between a buyer and seller to buy or sell something at a future date. I will buy that dog for $30 in 2 weeks, and then 2 weeks later there's a big dog boom, and suddenly that puppy is worth $60, and bang, you saved yourself $30. And that is how big companies save themselves money on purchases they'll make in the future, like oil. On the other side of that, if a farmer thinks that the price of spinach is going to plummet, they can lock in a deal right now to sell it at a specified price later if someone else thinks it's going to go up. But you and I are just traders who donate our savings to people who know what they're doing, so we don't care at all about literally anything except that candles go up and down. And no, you're not going to accidentally acquire 100 barrels of oil. Most brokers don't even allow that to happen. Contract expirations are important, but many brokers like NinjaTrader auto rollover or at least give you a notification to click yes on when it's time to switch to the next closest expiring contract. For the indices, the expirations are every 3 months. Don't overcomplicate this, but also don't forget, because you don't want to learn the harsh lesson of doing a market order on the wrong contract. You'll only make that mistake once, just like you will in this next part. News. Futures are about futures. So economic news and other stuff I don't care about will cause short bursts of violence that will liquidate your entire account in the blink of an eye. See these red folders here on forexfactory.com? Guess who's not going to be in a trade at 8:30? Me, because I'm asleep, but also because this is what happens. I'm too lazy to open NinjaTrader, so here's a drawing of why you should avoid having a trade open during significantly impactful news events like inflation data reports. Literally in the blink of an eye, the market will plummet, skyrocket, and all sorts of other stuff, while what we assume is algorithms rebalancing or adjusting based on whether or not the data was surprising or not. It's a good idea to not be in a trade within a few minutes of this, and if you're thinking to yourself, ooh, what if I caught part of that move? No, just go to the casino, because at least there it'll take longer than 0.4 seconds to lose everything you have. Literally every person ever who thought that was a good idea is now sad because they fucked around and found out that it was not a good idea. They didn't understand that this strategy only works on a sim account due to unrealistic fills. If you're wondering how to find the best trading strategy, Same. Haha, just kidding. I've got mine. But anyone who sells you a course on how to trade is either knowingly or unknowingly scamming you. Because if it could be taught with instructions you'd find in a course, those instructions could be automated, and you'd end up with an unprofitable algorithm. Discretion is what makes a non-working system work, and this video on the top right proves that, as well as shows you how to find the best strategy for you. Brokers and trading platforms. Let's keep this simple. I'm not going to go over commissions because that'd be like talking about which stores sell the cheapest bananas. I use NinjaTrader and think it's the best for most traders. This is partly because you can trade with lines on the chart and brackets on your entries, all sorts of other stuff. I'm sure in time that other platforms will catch up to this. They now own Trade8, and that's a great option as well. I have a full tutorial on NinjaTrader in the top right that covers everything in less than 6 minutes. Again, for now, it's probably the best trading platform and broker for most traders. If you need something more niche, then you can do your own exploration. Many platforms you trade on will cost money to use, including many of the ones here, but NinjaTrader is free. Again, there are more options out there, but I'm not trying to spend 30 minutes on this section. Since all futures are just buying or selling contracts, it's probably the most simple thing you can trade. There's so much opportunity for leverage, as you've seen from how much money a point of movement is worth, and that value is different for every market. There's no PDT rule, and the ability to scale in size is insane. 10 points on ES with 10 contracts is $5,000, so just think about that for a second. Since it's just contracts, the platforms are very simple and beautiful. You think it's going to go up, click the buy button. Want to close the position, click the close button. Think it's going to go down, click the sell button. Extremely simple. You'll also find a great bid-ask spread on popular markets like ES and NQ, their micro contracts, oil, bonds, and more. It won't be as good on less traded markets like deli ham and turkey balls. The guy at the grocery store will not understand what you're trying to do. Also, 60% of futures gains are taxed at the long-term capital gains rate, and the other 40% is taxed at whatever income bracket you're in, which ends up saving you a huge amount of money once you start making money. Now that you understand margin requirements and all that technical stuff, what size account should you have? Well, you should be on a sim account if you're just starting out, because trading with real money as a beginner would be like entering a piano competition after just watching one YouTube video and not actually playing. But for trading something like NQ at $20 a point, if you find yourself having daily profit and loss swings of around $400 and the margin requirement is currently $1,000, you're obviously going to want to have several thousands in your account. You could always deposit more money if needed, but it's nice to not have to deal with the pressure of being a few trades away from the margin requirement. Apply that same line of thinking to micros and just divide by 10 to find a good account size. Futures are a double-edged sword. You can make a lot of money in a couple minutes, but you can also lose that much. Scaling from micros to minis is one way to slowly size up, but that's not realistic for all trading styles. That's why I'm personally trading through a prop firm. By doing this, you can trade meaningful size, like minis, with someone else's money. You keep almost all of the profits, and they take the losses if you lose the account. All you have to do to get funded is to pass an evaluation, hitting a profit target before a max loss amount over a series of days. The only cost from you is paying for the evaluation. Prop firms are a tool that can be used responsibly or irresponsibly, and you should only take this route once you've got a strategy down. For me, taking this route was much cheaper than trading my personal money on NQ, literally saving me thousands of dollars. TopStep is currently one of the most popular firms, but if you look at this image, trade days evaluation accounts are significantly easier to pass. One of the things you'll hear about futures is how great they are because they trade almost 24 hours a day. While that might be true, regular market hours following the New York Stock Exchange is where the big action happens for most markets. You can still trade outside of these hours, but volatility and volume will be lower. That's not necessarily a bad thing, but I think futures brokers tend to blow the trading hour stuff out of proportion sometimes. So as long as you adapt to conditions being slower, go right ahead. The video in the top right goes over that more if you're interested. Also, this video was specific to learning futures, but if you're looking for a full guide on how to get started with trading, I have a 1-hour guide that took me 3 months to make on my channel. I made a futures guide 2 years before this one, but it was really bad, and so that's why I remade this. Thank you very much to my patrons for supporting the work I do, and stay tuned for some more frauds to get exposed.